Hi, I'm Mark and welcome to my channel. I'm a relatively newcomer to investing based in the UK, and I've been struggling to pick my way through this minefield of how to start investing. I suppose, why am I doing all of this? It's just to sort of set myself up for financial freedom. Coming a little bit late to the party in this, but as anybody and everybody says, the time to start investing is now. I wish I could roll the clock back 20, 30 years and start this journey then, but alas, I am where I am. In this video, I'm going to signpost you to some of the websites that I've found really useful in the last few months and share some of the apps and brokers that I've used. None of this is sponsored in any way, and I must set out at this early stage, I'm not a financial advisor. This is just for a bit of education, sharing some of the experiences and lessons that I've encountered through the last few months. Make sure you do your own research and due diligence before investing into anything. So you've probably found this video because you're trying to figure out how to start investing. And I suppose one of the first things you need to do is have a plan. If you don't plan, you plan to fail. First thing to do is set out your goals. This is relatively easy. Is it to achieve financial freedom? Is it to earn enough money to pay your bills? Is it to save up for a deposit for a house? Or potentially looking at your kids' education? Everybody should have goals, and what is really important is to set them down somewhere. What I've found to be really useful is write them down on a sticky and put them on the wall, the fridge, your screensaver. It just reminds you why you're doing this and sort of keeps that impetus going and allows you to keep investing. So first of all, make sure you're not going to need that money for the next 3 to 5 years. Next thing that's really important and everybody talks about is make sure that you do have an emergency fund there. And what people suggest is have between 3 to 6 months worth of salary, just in case something happens. Potentially you lose a job, you become ill, you need money to deal with an emergency, something goes wrong with your car and you need to buy a new one. Have some money set aside so that you can deal with that. And another good thing, the third thing that I'd recommend is if you do have any high interest loans, so if you have payday loans or you have loans on store cards, something like that, make sure you pay those off before you start investing money, because what you'll find is it is better to pay off those high interests, say at 10% or above, before you start to invest. As I've previously mentioned, you need to expect that the market will go up and down. There are certain things that will cause the market to tank. So you might have something happen in America, or bank coming out and saying that inflation is at the highest levels ever, and that causes some of the stock markets to drop drastically. You have the war in Ukraine as another prime example that has rocked the financial stock markets. So it is a matter of expecting that that's going to happen and understanding that you actually only realise a loss if you take out the money when it is sat at a value lower than you have invested. Another bit of advice that I would have is you will probably have invested on some form of brokerage. You will have that on your mobile phone, you have it on your iPad, you'll have it on your desktop. Don't look at it all the time. Have that regular investment going in and literally have a look at it every 3 months or so. You should be investing in things that you've researched, things that you believe in, so be that a company or an asset. And once you're happy, invest in it regularly and hold it for the long term. The longer you're in the market, the better chance you have of growth of the value of that asset. I know that sounds pretty boring, but as they say, it's timing the market and not trying to time the markets. So let's have a quick chat about what investing actually is. So investing in the stock market is where you buy a portion of a company or an asset. So what is the stock market? Stock market broadly refers to a collection of exchanges or other venues where you can buy and sell or have shares issued of what are called publicly held companies. Some of the key ones that you've probably heard of. So in the UK, you've got obviously the London Stock Exchange, you have the New York Stock Exchange, and you also have another example in the States, the NASDAQ. So looking at very much the tech companies there. So what is a stock? A stock, or sometimes commonly known as an equity, is a security that represents the ownership of a fraction of a corporation. And that's Investopedia's difficult description. So basically, with a stock, you own a proportion or a portion of a company and a share of its profits or losses, depending on whether that goes up or down for the share price. And in some cases, you might even get a dividend. So a dividend being a distribution of some of the company's earnings to the shareholders. So basically, you have the board of directors can decide to release some of the profits out to those people who have been kind enough to invest into their company. If you are dealing in dividend stocks, one of the key things to be aware of is you must hold at a certain point in time shares in the company, and this is all called the ex-dividend date. So you become eligible to get dividends if you hold a stock before the ex-dividend date. So this is great, all this talk about this, but where can you actually get your hands on the stock? So you need to go through, normally need to go through a broker, and that's probably the easiest way of doing it. Gone are the days where you had to pick up a phone and in order to buy a stock. You can now use your phone, use your computer and buy things. So two main routes. You can decide to go down a commission-free broker or a managed service broker. Loads of them exist. You will have seen them bouncing up all over the place. So you'll have your eToros, Trading 212, etc. Personally, I use Freetrade, Stake, and Invest Engine, and I've got links to them down below. If you decide to sign up, we both get something out of that, and it's just a way of trying to support and help me grow this channel. All the apps that I've been using are really simple. Basically, it's download the app, transfer some money into it from either a debit card or credit card or your bank, and then Bob's your uncle. You're ready to invest in a number of minutes. Sometimes there are a few forms just to fill out depending on what kind of investment you're doing, just to check who you are, where you live, and whether you're eligible to actually have the platform in the country that you live in. So option 2 is a paid brokerage. Sign up to them, you download them. Examples are Vanguard, Invest Engine even has a managed service so that you can buy into their different portfolios. Interactive Brokers, Hargreaves Lansdowne, there are so many. Just go on, do a quick search and you will find them quite easily. What you do need to look at for these managed ones is how much are they charging to actually use their setup. You want to keep an eye on that because basically you want as much money staying in your account as possible and pay as little as possible in fees to the brokerage. You'll find out that as money compounds, you want to keep as much of that, and you want to keep the money working in your account. Keep your eyes peeled, I'll do some videos in the future on what I think are some of the best brokerages. So just continuing on that theme of keeping as much of the money in your pocket as opposed to paying that out to other people. One of the biggest people who are going to try and take the money off you in the UK is the taxman. So if you can invest into a stocks and shares ISA, it basically means any of the profits that you make stay within your portfolio and you don't have to pay anything out to the Chancellor and HMRC. So in this current financial year 22-23, which runs from the 6th of April 22 through to the 5th of April 23, in the UK you're allowed to invest up to £20,000 into an ISA, so an individual savings account. But note, you can only invest into one single ISA every financial year. Looking at what kind of broker you actually want will really depend on what you want to invest into. First of all, we're going to look at the Forex trading. So what is Forex trading? Basically, this is foreign exchange trading, and it's speculative buying and selling of currency, basically looking to make a profit. I would recommend this is best avoided for beginners. Next is commodities. So commodities are basically raw materials or primary agricultural products. So if you think about it, these are things that farmers make or that mining companies extract. Here's just a quick example of some of the things that would fall under the commodity side of things. I've already mentioned what a stock is, but with every stock, it basically has what is called a ticker symbol. Others that I've just put up on the screen. Depending on the type of stock that you've actually bought and the number or the percentage of the company's share that you hold, you may have decision-making rights and you may get dividends paid out. For most people, unless you're a sort of Elon Musk kind of person, you are very unlikely to hold hundreds and thousands of shares in the company. You probably just have a few that you have within your account, and possibly even it might just be that you have a fraction of a share. It really is quite difficult to actually choose a stock to invest in. You can get really nerdy and technical about it all, sort of poring over all the balance sheets, looking at all their financials, looking at historically what they've done, looking at all the articles about them. It can get really quite difficult and time consuming. So which is why I don't do too much investing into individual stocks. What I tend to do is take that Warren Buffett approach and look at investing into ETFs. ETF is an exchange traded fund of shares of multiple companies within a bundled package. So what does all that mean? Basically, an ETF tracks an index fund, something like the US Standard & Poor's 500, the S&P 500, and here is an example. So VUSA is Vanguard's version of the S&P 500 index tracker, and you'll see on the screenshot that it is made up of a huge number of different companies, 500 of them in total, and you will see basically some of the companies. They are very much household names within the S&P VUSA ETF. So an ETF may track an index fund, or what it might do is it may track a geographic region. So here's another Vanguard one, the Vanguard FTSE Developed Europe. So it looks at companies predominantly within the European area. There are a couple of others that fall slightly outside of that, but if you look at the breakdown, you've got the majority within Europe, then have some within the UK, and then a few outliers. Another may be a specific sector type of ETF, so looking at the legal and general clean energy with the ticker symbol of RENG, and this looks at companies that are looking to drive forward clean energy. With an ETF, what is quite useful to look at is how much does it cost you, so what is that fee? And you will see on this screenshot the T, or the total expense ratio, is how much it will cost you basically to buy into that fund. Look at VUSA here, that is only costing you 0.07% of your investment. So lastly, we'll look at crypto. Cryptocurrency, or crypto or coin, is basically a digital currency designed to work as a medium of exchange through a computer network, not reliant on any central authorities like a government or a bank. You've probably heard of crypto, so you'll have heard of Bitcoin, potentially Ethereum. I won't go into it in any depth in this video. I will do future videos on crypto, as I hold a few small pieces, but do drop a comment down below to suggest what kind of crypto content you'd be interested in learning about. But for beginners, I'd recommend you do quite a bit of research before jumping into crypto. It is very volatile. You will see 50% swings over a 24-hour period, which can be quite scary if you're invested in that. As you see your money either go up and you get very excited or get very depressed when it drops. Couple of apps that I use are Coinbase and Crypto.com. There are links down below if you want to sign up to it using one of my links. For Coinbase, we'll both get $10 of Bitcoin, or if you go on to Crypto and sign up for one of their metal credit cards and invest, I think it's about £300 and get the Ruby one, you get $25, and I'll also get a kickback of $25 if you use my link. So what do I wish I'd done? Well, I wish I had started investing in ETFs about 30 years ago. And I'd have probably gone for something like the S&P 500 and made regular investments every month and just kept paying in. Enjoyed this video, please hit the like button. It really does help move me up the algorithm, basically, as I'm starting out on this journey. And also please subscribe to see more content and see what I'm actually up to and how I'm progressing. Also, if you want to drop a comment down below of what kind of videos you'd like me to do in the future, that would be great. Help me sort of plan what people are interested in. And thanks very much again, and see you in the next video. Bye.